Good morning. Today is September 10th, 2019. It's approximately, call it 5:20 a.m. Eastern Standard Time. My name is Oluwale Okabolo, Spartacus Trading Corporation, here to bring you the prep report for today, September 10th. Let's jump right into it. This should be a pretty easy prep report. Starting with the monthly chart, with one time framing down 2 months. We're in a 2 month balance area. Talked about that in plenty of my reports, and we're trading above the 2 month half back. On the weekly, we are now in a 7 week balance area. 1, 2, 3, 4, 5, 6, 7 7 week balance area. We're trading above the 7 week half back. Okay, and we're now in a within the 7 week balance area because this week has thus far closed back within last week. We're in a 2 week balance area. So we got a 7 week. Within the 7 week, we're in a 2 week. That means balance within balance. So we're still balancing. What that tells me on the time frame longer than the day time frame, we can get some back and forth action. Up one day, down one day, down one day, up one day, until the market demonstrates that it wants to. Or in this case, yesterday we had the chance to break out of last week's balance, break out of last week's range. I apologize, where we opened here, but there was no acceptance. Trade back in, close back within. So just expect some back and forth action on a daily because the weekly is not showing anything, any change to the uptrend on the weekly, because we talked about this in plenty of the reports. The higher lows on the weekly bar, and we're one time framing up 5 weeks. 1, 2, 3, 4, 5. Any change, we start to trade below this current 2 week half back, and you should be able to calculate that number for yourself. On the daily, pretty interesting. We had a 2 day balance area coming out of the weekend. We also had an inside day. We also had an inside day coming out of the weekend. The trend was up. 1, 2, 3, 4 days it was trending up. Monday we opened up higher. A breakout from the inside day. That's usually a go with trade. However, there was no acceptance, so it's like a go with trade. However, you play the balance rules. With that breakout, no acceptance. Market open, immediately trade lower. Found the acceptance lower. I talked about it in the pre-market report that the potential for an outside day was on the table just due to the range, due to what I was seeing going on, and I knew there was thoughts below. We had a proposed outside day when the market did get outside of Friday's range, but found no acceptance outside of Friday's range. The outside day doesn't count unless you close out, you open above and close outside of the previous day's range. So there was no acceptance. We closed back in, but we still got a breakout failure and reach the destination on that destination on the breakout or the balance rules when you have rejection from the balance rules. So, and nevertheless, we closed back within Friday's range, as you can see. On an outside day, if it did close outside of Friday's range, that would be a negative sign showing that there could be more continuation going lower. A failed outside day just shows caution that the market probably isn't as weak as price will lead you to believe, but the proof is still in the pudding. You still got to wait and get some more detail. So that's where we are with the daily. Let's go to the profiles. Here's a structure for Monday. Um, I just call it a double balance profile because we have a one tick double distribution. Really not buying that double distribution. However, it is what it is, and I don't fight the market. So these, because of this one tick double distribution, you look at the profile in two separate days. Okay, so even the 2 days in one. All right, so if we just take this as a day on its own, we have a balanced profile. Okay, we've got an 8 wide point of control. That's really all I can say. The daily chart basically sums up what's going on. We did have higher volume. Volume was like 4 billion for this little range, which I'm like, okay, something's probably going on that I'm not seeing, but it's okay. We'll figure it out as the market starts to unfold today. Just looking at the pre-market, this is my overnight chart where I have this is Asia. This is the Asian session where the market, you can see an overnight traded higher, and then something happened. I don't know, some news or something. Now the market's selling off, and then here is Europe. Okay, so Asia traded off. Europe could begin to fade the Asia move. So, like I said, because of the failed outside day, means that the market isn't as negative as price will lead you to believe. Doesn't mean that we can't sell off, but it just means it isn't as negative. And remember, even though we had a break of the one time framing on a time frame higher than the day time frame, the trend is still up. Doesn't mean we can't get liquidation. Doesn't mean that we can't begin to trade lower today. We have a gap fill from a gap from Thursday. I'm not showing Thursday, but there's a reference right there. We got a gap, and then there's a gap fill. Okay, so if there's anything going on to the downside today, you automatically will begin to see lower value. Lower value is what you need for a trade that will challenge the gap entry. And not saying we'll fill the gap, but at least to give you a good shot of where the market could go. You need value to be clearly lower today. If it's overlapping and you don't have a double distribution negating value, then the market could very well snap back up and you can get caught up in a short covering rally. Another another idea I want to share with you so you're not caught off guard. This is a chart I like to use to see kind of where price, where time, and where volume is. This is a your typical profile. This is a profile in reverse. TPO is based on time. The point of control is based on time. This point of control is based on volume for those who like to look at volume or those who like to look at time. I look at both. We've got a discrepancy most of the time from price spent most of the time in the lower half of the double distribution. However, volume is not in agreement with time. Most of the volume is right around here, and as you can see from here, which is on the in the upper half of the double distribution. So what does that tell me? There's a divergence. If the market cannot get clearly lower value, we could have a situation to where the market will or could perhaps trade higher to balance out the discrepancy. However, don't underestimate this one tick double distribution. It does mean a new auction. Nothing changes from the current momentum, which is down on an intraday basis. Nothing changes unless this double distribution gets filled. If this gets filled, that means we have change to the current momentum. The momentum's down, but not by much. So you need the market to prove itself to you to keep you out of trouble. I think that's all I got. Yeah, and then we got Europe, so I'll be paying attention to Europe to see what's going on. I think the final um, the final this that's what's the word I'm looking for. Watch overnight inventory. Overnight inventory will have the final word, at least as far as the early morning play, whether you get a inventory overnight inventory adjustment or the market ignores the overnight inventory. So before you look to put on a trade, you probably want to hold off till you have a clear understanding of where the overnight inventory is trading and what's the likelihood of adjusting overnight inventory. That's all I got, folks. This is Olawale Okabola, Spartacus Trading Corporation, wishing you a good day.